Second quarter growth far weaker than forecasts, missed everyone's expectations, and so it's no surprise that the Norwegian Krone's getting hit hard.
Yeah, market was positioned long of Norway going into this number. I must admit I would have been killed with everybody else here, but now we've come up to 800 on Euro Norway. Oslo's telling me the predominant concentration of buyers of Euro Norway has been non-Norwegian. Norwegian guys actually fading into the Norwegian Krone weakness to buy crowns, and I have some sympathy with that because the GDP number was weaker than we expected, but the Norwegian data has been volatile in recent months.
The growth story would paint a different picture. 0.2% growth compared to expectations of up to 0.8% is pretty weak, and
it's a big
the Norwegian bank will see that and think, okay, maybe time to ease. In which case, 8 goes out the window.
If they do it, then obviously you're talking about 8.10, maybe 8.15. There's a lot of stops above 8.10, Jamie. But for those people along the same line, if you're still in this position along with Norway, you're going to need some squeezing after that disastrous number.
The Australian economy is slowing, Asia's slowing, the mining sector's slowing. So why aren't we below 90 on Aussie?
I mean, is it 90, 92 the range, Jamie? That's what I'm thinking, because yesterday I came in, talked to a lot of guys in Asia when the Aussie was around 92.10 level. Now we're going to be, we've gone short of Aussie up here. The RBA is going to be what, as it turned out. So we need to be short of Aussie into the RBA, not after the RBA. So those guys were short. They've come back and took their Aussie back in the low 90s this morning. The rest of the markets jumped on the bandwagon because obviously, as well as the RBA, excuse me, and the RBNZ, you've also had the sell-off in emerging markets, and with the Australian economy so linked to Asia, what's bad for Asia is bad for Aussie.
So 90 on the downside is a big round number, obviously, but on the upside you mentioned 92, and is that where central banks are quite keen to sell?
Yeah, a number of guys I speak to have been shying away from the Aussie for weeks, but they are clear to me. If we get above 92, that 92 handle, they have an interest to sell some Aussie.
And to finish up the euro, just before we came on air, the euro popped above 134. It's a 2-month high, $1.34. Pretty remarkable, and doesn't really tie in with this overwhelming consensus that the dollar's king.
No, I love the dollar, as you know, but at the moment we're in the situation, it's not just the dollar, it's developed markets versus emerging markets. And developed markets doing that Mark Twain thing, rumours of my death are greatly exaggerated. Everybody wrote off developed markets, emerging markets, BRICS, you name it, we'll have it. Well, it's come back with a vengeance. And the money that's coming out of emerging markets is going home. If you're a French investor and you've been piling into emerging markets in Asia for the last 5 years, you've took some of your money out. You don't want dollars, you want your home currency, you're going to the euros. And that, in my opinion, is helping to give the euro a better bid.